What is up, everyone, and welcome to Now Next Never, our show where we talk about what's happening now, what's happening next, and what may never happen in the world of investing, crypto, stocks, NFTs, and so much more. I'm Nicole Casperson, and with me hanging out, as always, are my co-hosts Alana Saparu and Zaid Admani. Guys, how is it going? It's Tuesday. The week already feels kind of long, in my opinion, maybe because there's so much news happening. So many things to come, but how are we feeling today? What's the vibe, guys?
Man, Nicole, it's Tuesday. I feel good. I couldn't sleep because I was thinking about what we're going to talk about today. I'm just excited. The weather's nice. I went and took a nice walk earlier today. I'm excited to talk about the topics we have to discuss. Zaid, how are you feeling this afternoon?
Feeling good. There was a nasty rainstorm that flew through Houston this morning, but it's beautiful outside right now, so I'll probably go for a walk after the show. But before all that, we're going to talk about some 3 great stories that we got for today. First one, the SEC going green, but not everyone's happy about that. We're going to discuss what all that means. GameStop, back in the news, everyone's favorite meme stock. It's the video game shop is trying to level up their NFT game. That just sounds like a juicy story to talk about. And then finally, MetaMates, the people that work at Meta, they're called MetaMates. They might be looking for a new job, and it's not necessarily because they got rid of that free laundry. We're going to dive into that and much more. And finally, we actually have one more. We have a guest on today, eToro's Callie Cox, the US Investment Analyst at eToro. Callie Cox is going to be joining us again to talk about tech stocks. Super excited about all of this.
I am super excited, Zaid and Nicole. I'm so glad that all of our mates are joining and watching us on whatever platforms they're watching. So do me a quick favor while you're watching. Make sure you like, subscribe, and engage in our live stream because we love having you here. And also make sure you hit the notification button so you know every time we're going live, because we do this every day and it's super engaging. It's super fun with all of you involved. Let's not wait any longer. Let's get into the show right now.
So the Securities and Exchange Commission is planning to require corporations to outline the risks that climate change poses to their operations. The plan would also require companies to disclose how they're preparing to deal with those risks. So the SEC will take public comment for the next 60 days. I see this as a big win for investors. Transparency is key, and with the climate crisis only getting more severe day to day, these requirements are essential. I think these should have happened yesterday or maybe like 11 years ago, before we got to this point where the climate crisis is almost irreversible in damage. So anything to be done will be helpful. But I think that the pushback here will be from folks thinking that this is beyond the SEC's jurisdiction. Guys, what do we think of this? What do we make of it? Delano, maybe also a quick ESG explanation for our listeners here that might not know what that is.
Exactly, Nicole. And ESG stands for environmental, social governance. And really we're looking for, companies that are doing things to help our environment, help in a social impact, and have governance in place to do so. And so I think this is a really important, mandate that's possibly going forward, just because of the facts of transparency. As an investor, I always want to know more than less. And if I can know a little bit more about a company, especially what they're doing at an ESG standpoint, that's good. My one thing would be, on the pushback on this is, in the piece, it was mentioned that, environmental advocates are looking to champion this because of retail investors, smaller investors. They usually sometimes call them mom and pop investors. I want to know, are these investors actually digging in, or going to dig into the fine print, the footnotes of these, ESG governance plays, and actually look at all the different areas and the different companies and how they're matched up versus other companies? Because it is so that this will play a role. If not, then I don't know. We're going to be spending a lot of money. Companies are going to spend a lot of resources doing this. It's going to hurt the bottom line for investors. That could be on the other end of things. I don't know. I just don't know if this moves the needle enough from an ESG standpoint or from an investing standpoint.
Yeah, and I think you noted that a lot of companies are already reporting environmental impacts on their reports. But right now, the way it's set up is that it's kind of all over the place. There's no guidelines. What the SEC is trying to do with this proposal is set a set of guidelines to where there's specific requirements of reporting, and it's consistent across every company. So we can kind of compare the environmental impacts apples to apples across companies and across sectors. But yeah, you make a good point. this additional requirement right here, number one, can the SEC even regulate this? That's the jury's still out there. There's probably going to be a lot of pushback there, and this is probably going to go to court if they move forward with this proposal. And there's been, I don't know if we have concrete evidence if the ESG movement right now has had the environmental impact that maybe people were hoping. And this could be used as a way of virtue signaling. And I've been seeing that a lot. Virtue signaling essentially just being that a lot of companies might just, on the reports, do something that is environmentally good for just reporting purposes, but their overall business still isn't doing good environmentally. So this could be used as virtue signaling for companies that track ESG dollars, even though the company as a whole is still, impacting or hurting the environment. So there's still a lot to unpack here. And this is just a proposal right now by the SEC. This hasn't gone into effect. I think there's a 30 or 60 day comment period right now. And I think a lot of people are going to have a lot to say about this before this actually gets implemented.
Yeah, I mean, it's the whole reason I think that Paul Clements Hunt, who, according to Bloomberg, is the person who coined the acronym ESG. He has an interesting quote here. He says that the finance industry has done little to account for environmental, social, and governance risks. It's a whirligig, I haven't used that term before, a frenzy and a marketing mania. So, I mean, I totally see both of your points here, and virtue signaling I think is very, very real. I think it goes beyond just ESG and climate change, but for some hope, to be a little bit hopeful, I do know of, green fintech companies that are out there that are working to create more, data analytics, to create those sustainable financial solutions for everyday users, like sustainable banking or supply chain analytics. So there are companies out there that are working, that are putting in the work to make sure that anyone that is maybe just virtual signaling is getting held accountable. So there's work out there, but for the most part, it is kind of on us users to do our research and look into these companies and kind of decipher from there and see if we aren't just seeing greenwashing or virtue signaling.
Startup idea, guys. I thought of it. If there was a place, an app where they could aggregate all of these, companies and what they're doing. Nicole, you might already know if there's something out there. Lay it out by industry. We can just see. We can see the rankings. We can see it. We can make decisions based on this. That is my cool startup idea. Nobody take it. All right, I have lawyers, so don't take my idea, people. It's just for now, next, never family.
Yeah, somebody fund this right now. We need some checks. Awesome. Well, let's talk about the next story. We're talking about GameStop, everyone's favorite meme stock that gained a lot of press last year. They're back in the news. They just released their Q4 earnings. I think the most interesting that came out that caught a lot of people's attention was that they're going to be launching an NFT marketplace by the end of Q2, so in just a few months here. Now, I think there's a lot of NFT marketplaces. A lot of companies are announcing NFT marketplaces, but this could make sense, right? I mean, NFTs and gaming kind of go hand in hand. There's a lot of digital goods that have been created in gaming, and I think NFTs could make a lot of sense here. But what this NFT marketplace news is hiding, or maybe kind of overshadowing, is that GameStop's business is struggling here, guys. Their Q4 numbers, if you dive into the financials, they lost $147 million in Q4. Q4 is supposed to be their best quarter typically, and they lost $140 million. Their stock is down 50%, or about 50% in the last 6 months. I mean, their core business right now. They're looking to get a turnaround here, but their core business right now, I think, is still struggling. I mean, are you guys still buying, like Delano, I know you're a gamer, are you still buying physical games right now? Because I personally have only moved to digital at this point. So I wonder if this is just kind of a way for them to pivot hard and kind of hide the fact, or maybe not hide the fact, but overshadow the fact that their core business is struggling.
Yeah, Zayd, I actually am. I went into the store. I went into GameStop and I bought 2 physical games, NBA 2K, Madden. And guess what? The welcome there was so amazing. Like, there was so many employees. They were so nice. They gave me a bag. I had a free bag. I felt like part of the family, honestly. And so I'm believing that this could be a legitimate transition and strategy for GameStop to keep them afloat. You mentioned the numbers. Their losses have widened. But I do think when your losses are widening, what do you have to do? You have to change strategy. They have to do something with their core business, but they can also look for other ways to invest and other ways to gain revenue, right? Like, here's a stat. Obviously, they did $2.12 billion in revenue in their last quarter, which did exceed pre-pandemic levels. So, I mean, Of course, we know the business is struggling, but what have we seen a lot of companies do? Shift to different spaces. And the NFT space is kind of like you mentioned, it could be a synonymous place, especially if you're thinking of gaming NFTs. Some that are, the gaming fans have cult fans, right? Like gaming publishers have cult fiction fans where they just love what they put out. This could be an opportunity for someone to have a collectible in their favorite game, to have a new skin, which is kind of a way for you to add a character in a new game. And this is an interesting area. I think if you look at where a lot of the brains are going right now, Mark Zuckerberg, he's shifting into the space. A lot of brains are going there. So I don't think it's as much as a gimmick as people think. Some people may think, but it's going to save the company. That's yet to be seen.
But I mean, maybe adding a little, a bit of a gimmick to a strategy is helpful, right? I mean, I think that GameStop here can really pull on some of those nostalgia strings that we millennials are kind of really feeling right now as we age, and getting more into that. I mean, there's also like the skins that video games have, and I know that makes like people a lot of money. So I mean, there's potential here, right, for GameStop to not just use this as like headline play or use this as like a marketing play and actually make this a proper business strategy. Totally. I mean, I don't know. I still think that maybe Instagram has a better shot here at like normalizing NFTs, but when it comes to maybe creating those niche audiences where folks are going to be like, yeah, I'm gonna go here for this NFT or a gaming skin or a certain thing. I mean, GameStop might be able to ride that wave and do something more than just memes, to be a meme stock.
Yeah, and that's what I was thinking about, right? Like, because these marketplaces, I mean, we've seen marketplaces usually, like, we only have a few winners. It's kind of a winner-take-all model because the way marketplaces thrive and grow and become, provide more value is if there's more users and there's more buyers. So typically, it's a winner-take-all model. And we already have so much competition in the NFT marketplace of OpenSea obviously being the one that's super famous, then Instagram's trying to get in there, Coinbase is trying to get in there. So we're going to have a lot of players enter the space. But Nicole, you brought about how it's a niche NFT marketplace for gaming specifically, and we've seen niche marketplaces work. Like, for example, StockX is a very good one where it's like a niche marketplaces for sneakers and other items. And so maybe if GameStop can kind of pivot and actually have a successful pivot towards a gaming NFT marketplace, I mean, I could definitely see it work, and leveraging their brand could work. But I think Delano brought home the point right there. It doesn't necessarily mean that's going to save the company just yet, because there's still so much unknown, and yes, they have a lot of cash, but this is a very, very unknown space. And NFTs, as popular as they are right now, we don't know what the future really looks like just yet. I'm optimistic on NFTs, but we're still trying to figure all that out.
Yeah, you're so right, Dave. We never know. That's why we are just loving to have that conversation. Let us know in the comments what you think. And as we move forward now, let's talk about another big company being Meta. Meta, Facebook, our favorite friend Mark Zuckerberg. So over the past several months, a lot of chatter has been going on with what's happening with employees at Meta. The stock has actually gone down around 40% over the past 6 months, and some employees who have underwater stock options are looking around at different opportunities. Quick refresher, for those who don't know, employee stock options are a form of compensation that employers give to employee. It's a contract, a set number of shares that a company allocates as compensation, right? And so it's set on a certain price that's granted based on what the board allocates. And for some of the companies that are doing well, this could go up and be very lucrative for people that have those shares. But if obviously the other scenario, if it goes down, it could not be as lucrative and you could have less compensation from these employee stock option grants. And this brings to the question right now, as we mentioned, what this trouble of Meta's stock has done over the past 6 months or several months. What does this mean for the employees there? One, is this more of a troubling thing when it comes to just people thinking short term of like the stock options, or is it an overall kind of like picture of like what's going on inside of Meta and people looking outside for better options to places to work, guys? Nicole, I'm super curious to hear what you think on this.
Yeah, I'm always thinking of the great resignation and the great reshuffle that is currently happening right now. And so, you think about Meta or Facebook Meta, and I wonder what the culture is like these days. In the past, big tech companies were really praised for having these modern and lavish and startup-like company cultures with nap pods and sushi buffets and salad bars, like you name it. And is Meta now in this place where, hey, we're a major corporation, and so let's like fold into these traditional institutional company cultures where we take some of that away, especially as people are going into the office more. So that could be another reason why people want to dip, that in a bad stock, or it could just be like adding fuel to the fire there. But so I looked into it. According to the New York Times, just last week they reported that Meta is rolling back some of their famous perks like free laundry and dry cleaning as it preps for people to go back to the office, or more people to go back. So tech companies, like I said, they offered these lifestyle perks in return for employees to work the extra long hours that they had been. So I mean, is that kind of incentive going away because we are in this place where people are a lot more mindful of the work environment that they're going to enter, if they even want to enter in a physical work environment at all, or just work remote? I mean, I definitely think that this has a factor in all of the things. So I always think of that perspective there, and what's going on with the Great Resignation.
Zuck needs to bring back the free laundry if he wants to keep his employees, right? No, that's not why people are leaving, guys. The reason what's happening with Meta, in my opinion, is that, yes, obviously the stock options, which is a huge, employee stock options, which is a huge component of total compensation that Delano talked about, that's obviously worth a lot less. So the total compensation for their employees has gone down. People are making less money. They're gonna be unhappy. It's just human nature. But also, a lot of the people that worked at Meta for a long time are probably doing pretty well for themselves, right? These people have made a lot of money when the stock was going up, and so they have a lot of options now. If they're doing pretty well financially, now they can kind of take their talents to different places since they're not making as much at Meta as they used to because the stock options are being worth less. They can take. I mean, there's so many new industries that are popping up now. Fintech is huge. Crypto is huge. There's so many places where these tech talents, which is like some of the most desirable in-demand talent out there, can go to. Also, if you think about what Facebook is kind of going, or Meta is kind of going through, they're going through a massive cultural shift and somewhat of a shakeup of their business, right? What once people thought of like Facebook being this like massive business and with zero competition, that's not the case anymore. They pretty much pivoted their entire business to this metaverse, which is still an unknown business model. So we don't know how that's going to be. Maybe that's making some employees there kind of nervous for the future of Facebook. So Facebook has a lot more competition, TikTok being one of them. So I think those are a lot of factors that are contributing to it. Yeah, sure, people that can't do their laundry, I'm sure they're upset about that as well. But there's many factors going into it, and I think it's kind of like a negative flywheel, right? If Facebook has a brain drain and more talented people are leaving, that's going to make it harder for Facebook to kind of have a turnaround and kind of realize this vision of the metaverse or whatever they're trying to do. So this is a problem that, I mean, Zuck is a smart dude. Maybe he can figure it out, but this is a continual problem that Facebook's going to have to deal with if they want to have a turnaround.
Yeah, Sage, you're so right. Actually, hearing from people in my network, it was a litany of things why they switched jobs. Right now, it's a hot market with their resignation. People are demanding more when it comes to money. And as you mentioned, like compensation, cash, that plays a big part into why people make decisions. If your employee stock options are kind of going down, then you're going to kind of look at what other options are out there for me, what other companies are doing things. Is it short-sighted though? Because, we don't know what's going to happen with Meta, as you mentioned, the change in strategy. Something could be, that could be something that's really potentially big for them in the future, but we just don't know right now.
Totally.
All valid points. But you know what, guys? Just because Meta employees are seemingly unhappy with their stock doesn't mean all tech stocks are tanking. In fact, several have been doing really well recently. But I'm curious, what's been causing this surge? So to help us out and help us understand a little bit more on what's going on with the tech sector, let's all say hello to our friend Callie Cox, the super investment guru from eToro. That is her official title. She's got her finger on the pulse on everything. Callie, what is up? And welcome to the show.
Be back, especially on a day when stocks and crypto are both up.
Well, thank you so much for joining us and helping us out decipher through all of this information. To start, are tech stocks back in favor again? Let's just like set the tone there.
Yeah, good question. So I think there's a little bit of FOMO going on here, Nicole. The market turned late last week, and I think people saw it as a coast is clear sign to maybe pile back into some of those popular names. The market may seem to think that the Fed is maybe may back off of its plan for rate hikes because obviously, more rate hikes means, maybe discounted future growth for these tech stocks. So maybe the market thinks that the Fed will flinch, or, maybe this tech sell-off has just gone too far and people are tired of it.
Thank you, Callie. That makes a lot of sense. And how I think about things is, volatility. Volatility is bad, Callie. Like that could be, advantageous for some people and also something to people to be wary about. But what does that say for investors right now? We kind of about tech volatility, a lot of different things going on in the market. We talk about everyday investors as well as professional investors. How do they handle this volatility? How do they look at it from the short-term aspect and a long-term aspect?
Yeah, well, let me just say, I think the everyday investor does have the upper hand here. Because if you think about pros versus the everyday investor, pros have a lot of advantages. They have an informational advantage, they have, more resources. But retail investors have that long-term time frame. And when you look at tech, I feel like that's the perfect framing of pro versus retail investors. I mean, pro investors are looking at tech and they're saying rates are moving higher. I'm not loving tech, and tech is getting a lot of hate from Wall Street. But the everyday investor like you and me, we have that runway to invest in story stocks. So if you're an everyday investor, as long as you approach the investment according to your goals and needs and you know what you're getting into, some investors are stepping in and saying, maybe it's time to pick up some of my favorite names on sale, these good stories that I have a lot of faith in.
So what you're saying is hey Callie, what's going on? Hey, so what you're saying is that we're less likely, us retail investors are less likely to paper hand these tech stocks compared to these institutional investors. I'm saying that. You're not saying that. I don't want to get you in trouble. So do you,
that, yeah.
yeah. Do you think that? So do you think this rally is mainly driven by retail investors or institutional money? Because that is very curious what you said earlier. Do you think it's a retail driven rally right now?
Yeah, well, we all know that retail has a bigger voice in this market and has a bigger impact on this market ever since, the COVID crisis of 2020. Right now, we are seeing a few signs of institutional investors, playing a little bit of catch up, saying, oh man, stocks are going up. And, if I want that kind of performance, I'm going to need to buy in. But at the same time, I think it's a big mix of, people jumping into the market. We're seeing higher ETF flows. We're seeing, more signs again of institutional investors buying who wouldn't normally utilize an ETF to buy. So I think it's a mix of both. And honestly, anecdotally, a lot of my friends are excited about the market right now. So there you go.
As a retail investor that got super excited about these tech stocks a year and a half, 2 years ago, I'm feeling the pain, but I'm glad that some of the pain is being alleviated. So I'm loving to see that. But do you think that this rally might be a head fake? Like, do you think that this is just the market kind of just playing games with us, or do you think we might have found a bottom?
Yeah, okay, so I'm so glad you asked this, Zaid, because I don't want to get too optimistic. First of all, got to be balanced. I'm a researcher. I look at things from an objective perspective. But, I want to point out, too, that rates are going higher, what I mentioned earlier, and that's not typically good for tech stocks, especially those riskier, more unproven, more unprofitable tech stocks that we've seen perform so well recently. So actually, I made a chart. Take a look at this chart of the FANG stocks, big tech stocks versus the Renaissance IPO index, basically an index of the newest IPOs. And as you can see here, IPOs, the newest IPOs have done significantly worse than big tech this year. And there's a reason for that. There's a lot of fear about rates going higher and what that can mean for these story stocks, these riskier stocks that have investors that are pouring a lot of money into them that might be, a little bit scared off by the fact that capital is being pulled back. So, right now, these riskier stocks are leading the rebound. This Renaissance IPO index is up 20% over the past week compared to big tech rallying about 14%. Good either way, but IPOs are outperforming. So, and put it all together, and it could be a head fake. I think it's still a really tough environment to be a tech investor in. You just really have to balance your long-term optimism, those really good long-term stories, with this short-term reality.
Yeah, that makes a lot. I appreciate you breaking that down. So we're still far away from the summer of 21 when things were flying high, but we'll keep a lookout for maybe there's some optimism, but I'm still a little cautious myself.
Yeah, I feel that, but summer's coming.
Well, maybe things will get warmer in the summer, if you will, with all of that. Anyways, but thank you so much, Callie, for joining us, for answering all of our questions. of course, anyone that has any more questions should reach out to Callie yourself. You know, she's accessible. And also comment below, engage with us, let us know what you think. Otherwise, thank you so much, Callie, for joining us. Please come back soon.
Oh, of course. I'll be back.
Thanks,
All
Callie.
right. Awesome. Bye. So now let's talk about the stories that didn't exactly make our top, but are happening now, next, or never. For me, I have now, it is day 2 of the confirmation hearings for Supreme Court nominee Ketanji Brown Jackson. I've been super glued to the to C-SPAN basically, as I've been watching the hearings play out. But yeah, she, it's a historic nomination, first Black woman to Scotus, the 3rd Black person ever. So very exciting that is happening right now, happening all week. She has said some really amazing and inspirational things. So yeah, if you just kind of want to be in the know of what's happening there on the highest court, I would tune in.
C-SPAN ratings through the roof. I got next. Cyber attacks, not the best right now, but President Biden is warning that cyber attacks from Russia might pick up, and just kind of start getting prepared. He's like warning companies and corporations throughout the country to kind of prepare for these cyber attacks. We've seen them do some cyber attacks in the past. The investing angle, I mean, this might be a really big year for cybersecurity companies. I think they've already seen spike in cybersecurity companies and some of them, so this might just be a really, really big year as companies start, gearing up to take on cyber attacks.
Scary, Zaid. Cyber attacks are scary. I have never, and guess what, guys? I want to talk about never forgetting about your first investment love, which for many of us could have been Warren Buffett. I don't know who it was for you. It was for me, all right? I remember, reading his books, watching his documentaries when I got introduced to investing. And guess what? Along the way, I kind of strayed. When it came to 2020, I strayed. We're talking about tech stocks, Kathy Woods, she's great, and everything kind of strayed away. But don't forget about that, because Warren Buffett just announced a new deal to buy an insurance company, Allegheny, for $11.6 billion. And then it just made me remember about what he was doing. I looked into his stock, Berkshire Hathaway stock. It's up around, nearly 60%, while the S&P is down nearly 6% so far year to date. And it just reminded me that, we get caught up in the hype, we stray, we lose our way. But guys, don't forget, always go back to your first investment love, and you never know what you may find.
Dude, one Berkshire, that's a great answer. Warren Buffett's the OG. I've made fun of him in the past, so I apologize. Warren, you're the OG. And Delano, do you know that, why doesn't he do a stock split on Berkshire stock, man? It's worth $500,000. I know we can buy fractional shares nowadays, but is it just a massive flex that he has one of his stock is worth $500,000? That's insane.
It is insane. Berkshire the A shares are $500,000. I don't know. I think it's probably just because he really doesn't need to play the retail stock split game, right?
He doesn't care about us.
He doesn't care about the institutional money is already in. Maybe that's part of the reason, but he's focused on buying companies. They're doing a lot of deals. I mean, that's probably the bigger reason. Doing a lot of deals, focused on a lot of companies. But they should look into that. I think it would even could potentially do some things for the company, but obviously not economically, but it would create more buzz.
Totally.
I feel more FOMO because I don't think I've experienced my first investing love. So apparently I'm open for that game. It's love for someone to steal my affection there. But anyways, guys, thank you so much for all of the insight, all the information. That does it for our show today. Thank you to our audience for tuning in. Thank you so much for joining us. Be sure to like, comment, subscribe, all of the things. We want to hear from you. Otherwise, we'll see you tomorrow.
Peace.
Happy